Okay, perfect. All right, perfect. So let's go ahead. Now, I wanted to do something a little bit different for today. And I wanted to, because a lot of you guys have asked me, how do you go ahead and create a full trading model, right? So I'm going to first go over it and then I'll answer questions as we go. It's going to be actually a little bit more interactive. So I'm going to make sure that you guys can also kind of have your input as well, because I want to answer a few questions. Now, I do have a few bullet points I want to go over. So I'm going to talk about the first thing in here, right? So this is going to be essentially how to create a full trading model. Now, what exactly is a trading model? It's just a set of rules and it's a set of rules that ultimately you have to create in order to go into the marketplace week in, week out. It's like you don't want to go into the marketplace without a full game plan, right? Because at the end of the day, when it comes to trading, it's so much easier to go into the marketplace and you don't have to necessarily think too much. Everything is already outlined and it just helps with execution, right? Because the whole point of trading is how are we going to be able to execute at a high level? And that's the biggest thing. Ironically enough, when I go through some of the homework assignments, I see a lot of people actually doing pretty well in terms of identifying the opportunities, right? Like you guys are very familiar with some concepts, and some people aren't, like they're still learning it, but a decent amount of people ultimately understand what it is when it comes to like the concepts, right? Again, it's not rocket science, it just requires a lot of some studying and it requires, a little bit experience. Now, how to create a full trading model, it's very important for us to identify this because you need to know what is it that you're going to be trading on a day-to-day basis, on a week-to-week basis. Now, there's two components to how to create a trading model, and I really want to get over these two things. Number one, right? It's going to be what, let me make this a little bit, okay. What exactly are you looking for? Right? There's two components. Everyone always talks about what are you looking for in a trading model, but this is what most people don't talk about. What are you looking, right? So what are you looking to avoid? What type of market conditions do you not trade well in? For me, right? And I'm going to give you guys just pretty much like a broad overview of my trading model, and then I want you guys to be able to answer these questions in order to do this, right? And it's ideal that you guys can like put these in your notes because you're going to have to answer this for yourself. So I'm going to answer it for you guys based off my personal preferences. And then, yeah, then we'll kind of go from there. So what am I personally looking for, right? On a day-to-day basis, right? I'm looking for number one, clear liquidity sweep at premium slash discount. So pretty much like at a key level. Let me just actually make this a little bit smaller. Right? So what am I looking for? I'm pretty much looking for this, right? I'm looking for a clear liquidity sweep at a premium discount, looking ideally for H4 EBP at prior high slash lows or OTE of a range, right? Very simple. So same thing, like I was talking about in the course content. If I see the market sweeping liquidity, I want to see some sort of H4 EVP ideally. And then again, this would meet this requirement from premium down into discount. Maybe there's some sort of fair value gap. And then there's an EVP. I'm just looking for the retracement. Boom, right? Super simple, super. It's not complex. Now, this is what I'm personally looking for on a week-to-week basis, on a day-to-day basis, specifically using the EBP method, right? Now, what's another thing that I'm typically looking for, right? Clear liquidity sweep premium discount. I'm looking ideally for a 4-hour EBP at prior highs, lows. And how, now again, this is the next thing that you need to do, right? You know what? I'm going to make this into a separate category as well. So exactly what I'm looking for, this is the setup, right? Very simple. I don't overcomplicate it. Now, what am I looking to avoid, right? And let me just duplicate this and then kind of bring this over here. So let's go ahead, change all this up. Now, what am I looking to avoid? Trading EBPs that has already a clear level, right? Number two, trading pullbacks after a higher time frame level gets hit, right? And number three, for me personally, market one-sided market conditions. Now, this third one, right? Like this one is a lot of people might be like, "Whoa, like why would you want to avoid one-sided market conditions?" Like if like the way the NQ has been trading, I personally do not like trading that very aggressive type of market conditions because you just get like small little consolidations next leg up. And I know some people might think like this must be the easiest thing to trade, but the reality is that most markets are not going to move in this fashion over the course of the year. You're going to have moments in time when the market does that, where it's just one-sided traffic all the way through. For me, I'm not comfortable with trading that. And again, that's why you guys have to answer these questions because some of you guys might actually absolutely love to trade one-sided markets, right? But for me, I don't like trading EBPs that already hit a clear level. So if I'm looking to target maybe a DOL and I see like, a bearish EBP that forms after we swept a key swing low, this is not part of my rules. I do not want to trade this. This is not for me personally. Okay. Okay. Let me just be careful with this. Okay. So for me, this is one thing that I really want people to understand. You have to answer these questions, right? What are you looking for and what are you looking to avoid? Now, if you don't know the answers to this, that's perfectly fine. You have to kind of go through the course content. You have to go through like maybe like throughout the week with the trading models that I put out there, and then you figure it out like, okay, what are you comfortable trading? A lot of you guys will probably benefit from just focusing on the 4 hour EBP, and then looking for like, these types of requirements. Now, right? So what am I looking for? What am I looking to avoid? This is the first couple questions that you have to answer, right? Now, this is where you take things the next step, right? Now, when you know what you're looking for, how am I going to enter? Now, this entry, a lot of obviously this is like the biggest thing that most people they struggle with is like, how do I enter a specific trade? And obviously, you guys know the dynamic risk approach, the front side versus back side move, etc. that I teach. For me, or like let's say the confirmation entries, right? For me, how am I going to enter? Typically, this is always going to be a little bit different based off the current market structure. Now, if I know, for example, if there's like a 4 hour EBP based off of this concept, right? Let's say a bullish EBP, swing low, and I know that the market can possibly have the next candle, the 4 hour bar, push down, push up, but I know that there's a very clear DOL up here. And in this overall range, this is a very big range. If I understand that, right, and I know that I can catch maybe like 100 pip move on GU, right? Am I going to be super strict on the entry, even though I can kind of just enter on the next candle wick, and then look for that move up, right? How am I going to enter on that one? For me, it's gonna vary, right? So if in that perfect example, and let me actually make this again smaller. So again, how am I going to enter that specific trade? Right? If the range is big enough, and again, you're going to learn that through experience, enter on the H4 pullback into 25 to 50% with stop loss above roughly 80% of the EBP range. And don't worry, guys, I'm going to show you like actual visual examples and representations of this as well. So and actually, let me do that now. Let me just have trading view up here. So I just that way you guys can kind of follow along and be able to kind of see that as well. Okay, nope, not interested in that offer for now. Okay, let me go to like GU because I know GU's this EBP is already forming, which is kind of unfortunate. I really want to see this play out. But like for example, right? So I have the 25 to 50% mark of this. This is the upper part of this range. And again, if you guys have the indicator, even the base level indicator, it's the same thing. 25%, 50%. Inside of this range is essentially like the buy zone for me. Right? Now, why do I have that? Because sometimes the market won't come back to the 50% and I just want to enter. And that's why I coded it like this in order to kind of visually show it. Now, I know a lot of people use the EBP bar low, and I actually made a video about this in the video lessons as well, which I would recommend you guys to go watch. The truth of the matter is this, the invalidation point, if you can actually have a little bit of a tighter stop loss if you so this is the 75% of the EBP range. You could use pretty much the 80%, etc., and stuff like that. So from here to here, roughly about 50% of that, that could just be the stop loss, just to give it a little bit of room. So something like this, just as a visual representation. You enter somewhere here, your stop loss goes there. Now again, as the mentioned criteria, right? if the range is big enough. That's the key element for this entry model. Remember, you can have multiple ways that you want to enter a trade based off different circumstances. If I know that there's a potential for the market to go all the way up here, which is that DOL on the prior week high, right? This alone is 2.5. And I know that I can just look for a backside move, etc. Now, another way that you can do it, and I talked about it in the course content, you could just be like, hey, if I see a H4 ABP, right? This is one method. Now let's go back to method two. So let's just say, um, go down to H1, look for a OTE retrace slash order block slash fair value gap. One of the three, right? That could be your trading model right there. And again, you could have multiple. Maybe you're someone who's very strict and you only like to trade one of them. Maybe you like to have two. It's really up to you guys. And that's again the whole point is I want you guys to be self-sufficient. So let's just say you said, okay, I'm going to look for any fair value gaps that form inside the EVP range. You would have obviously not entered on this one, except and you would have missed this potential opportunity. Now, let's just say you would have said, hey, 1 hour order block. So as you guys know, these last down close candles before the move up, if you just highlight the opening price, maybe this could have been your entry, right? Same thing. And then you could have a stop loss below. You have to define how you want to do it, right? These down close candles, maybe you put the stop loss below like the order block range. So this is technically the order block, ignore the wicks. And then you could be like, hey, I'm just going to put it below this order block candle by a few pips. Same thing, it ends up being the same thing as this. So entry, stop loss, etc. Now you could even take it one step further where you're going to be like, hey, I only want to see a backside entry. Whoops right? So then let's go back in here. Now, again, you could do this where it's like number three, backside entry only on M15 time frame. And you guys see where I'm going with this. Is essentially it's really going to be up to you. My biggest thing when it comes to trading is, again, what works for me might not resonate with someone and vice versa. So I want to give you guys a bunch of options for you guys to see how to create a full trading model versus just telling you, oh, yeah, this is a trading model you should all follow. Because some of you guys might not like one trading model that I use, some of you guys might like one, and etc. Now, again, I put it all out there in the course content, the different trading models, etc. But this is how you guys can go about slowly creating one. So let's just say you want a 15-minute entry. And I actually talked about this in the Discord. The journal session that I just talked about, the video lessons recap. Someone in terms of their homework assignment, I talked about it. Sometimes you get like a 15-minute structure in here. So then this could be your confirmation, right? Where you have a BPR, which is going to form pretty much here. Right? You have this fair value gap that forms, BPR, we have a swing low. And some people might be like, you know what? I want only tight stop losses. I don't like having a wide stop, right? Because someone asked that question. It's like, hey, Omar, like sometimes the risk to reward is a little bit skewed when I use the 4 hour EBP, right? If I just enter on the 4 hour EBP and it's like, yes, that's correct, especially if it's a very big bar. But sometimes you actually get small EBP bars. Let me just as an example, let me see if I can find like a very small one that ends up working. Okay. Now these are still pretty wide ranging bars. But nonetheless, if you get like a very small bar, like let's just say that takes out the high. I know there was I forgot which pair it was on. But there, like let's just say like, for example, if let's just say you get like a very tiny bar, like let's just assume this was like a bearish EBP that formed in here, the size of this bar, right? Just go along with it for me. Right? And then you see this form. You could be like, well, I could just enter on the retracement here. It's a small bar, so I can, and there's a range down to this fair value gap. Okay, you have a full trade model. You have your ranges, and you realize, you know what, this can actually play out in terms of a very high risk to reward. Very similarly, with the example that I talked about inside of the that video lesson, same thing. If you want to be very tight with your stop loss, you can just enter like something like that, put a stop loss below that M15. And some people will be like, well, what if it comes down here, takes out the liquidity and then rallies? Well, that's the risk you're running, right? Because at the end of the day, what you're trying to do in this case is you're trying to optimize your entry. So in this example, right, price would have pushed up, and like let's just say you take this as an example, you would have been up 3.4 R on this trade. Now, again, the con is, and which is the next part I'm going to talk about, the con of this type of approach is that you're going to get wicked out of some trades that do something like this, right? Where it comes down to your stop loss and then goes this way. And then you're like, damn, I'm so upset. Why did I do that? Blah, blah, blah. And the truth of the matter is this. And this is the most important part. So again, you guys get how you're going to enter, right? And look what I'm going to be putting over here. This is something that I honestly, again, I don't watch everyone trading on, but I barely see anyone talking about this. Even people that I've studied under. What cons are you willing to accept? Right? But the truth of the matter is this: if you take a backside entry only on the 15-minute time frame, let's just say you're someone who only takes backside entries. The con of a backside entry is this, right? And let me just again adjust this. Okay, the con of right. So if only trading backside entries, what are the cons, right? This is going to be very simple, right? You're going to miss trades with no confirmation. Price might wick you out inside of the H1 slash H4 reference point, right? Or support, resistance, whatever the case is. Right? These are going to be the cons that you're going to have to deal with when it comes to the backside entries, right? So what are the cons that you're willing to accept? Not only that, but obviously everything has pros and cons. The pro of this is you get higher risk to rewards, right? So what are the cons? So let me actually just edit this a little bit. What are pros slash cons you're willing to accept? So we'll just put them all in one, right? So these are going to be the cons, and let me just as well cons, and these are going to be the pros. And the truth of the matter is this. Let me put this as well. Now, the pros of the 15-minute EVP in terms, I mean, I'm sorry, 15-minute. So if I'm only, if only trading backside entries. Again, what are you gonna have? You're gonna have now. These are the pros, right? Much better risk rewards, RR, tighter stops. Realistically, those are the main two pros of this, right? Again, you don't want to make this too long. Because again, it's like you just want to name the most obvious pros and cons, right? If you're only trading the backside entries, you're going to get a much better risk reward, tighter stops, and it's generally quote unquote safer, right? Generally, whoops, generally safer. Now, again, some people will argue this or not, but whatever. Now, the cons is sometimes you miss trades because there's going to be no confirmation, right? And then on the front, like for example, if you're waiting for a pullback, sometimes the market might do something like this and then just, and then just boom, right? That's the con. So you have to be willing to accept what you're going to do in terms of the pros and cons. When you clearly define this, all it does is just set expectations. I think trading what most people don't understand about trading is like you just have to set expectations. And I can recommend you guys this guy, this Asian guy, who I his name is Lit Nomad, and he talks about how the top traders at his firm when he used to work on in the Chicago Board of Exchange, he talked about how the best traders were the ones that were just able to understand what trading really was. Like it's just a game of probabilities and it's a game of managing risk. Like the whole, I mean, don't get me wrong, you do need to have skill in trading, in my opinion. But the most important part of all of this is understanding and setting the proper expectations. And that's why most people can't succeed, is because they can't take losses. They have this expectation that once if you're talented, you don't take that many losses in trades. Or like if you're talented, you're always ending the day green, or you're always ending the week green, or whatever the case may be. But when you set these pros and cons, right? What happens is now you're putting yourself in a position where you're setting the framework of understanding the benefits of your system and then the negatives of your system. And don't get me wrong, guys, every single system has pros and cons. There is nothing, I don't care what anyone says. Even the people who preach high risk to reward, more than likely they give up a little bit of win rate in order to get that. Or they have sometimes where they get wicked out of trades, etc. Or again, a con could be this, right? If you're using tight stop losses, right? The spreads. What if you have slippage? Your losses are gonna be much higher if you get slipped. Again, everything has a pro and con, no matter what people will tell you. Even if you're trading futures, right? You can get slipped on futures, even though there's like almost zero, like there's zero spread, right? So I'm gonna take a little bit. I'm gonna go through the questions real quick. If you guys have anything, and then we'll kind of continue on with this. So if we are trading prop firms with this strategy, do you recommend having a larger account? With prop firms, it's different because I think with prop firms, I've always said it like this. If you have a prop firm, like let's just say you have $500 worth of capital that you're willing to invest inside of a prop firm challenge. What you ideally want to do is you want to try to make this $500 into three accounts versus like buying one. So for example, I know typically the 100K accounts on the CFD side is about 500 bucks, right? Give or take, sometimes a little bit lower if you have a discount code. Now, in my opinion, instead of buying one account, right, you should just split it into three accounts. So if you could buy three 25K accounts, it's much better because what happens is you're in a situation where like you're spreading your money into multiple accounts. So even if you blow one or two, that last one that you get based off of like how your risk is, it's ultimately going to have a situation where you give yourself more of an opportunity to pass a challenge if you're going to be more aggressive, right? If you're going to be someone who's going to wait for good opportunities, and then when you get the good opportunity, maybe you risk 2%, 3% on the trade because you just want to pass it, which again is something that I talk about all the time. The reality is you give yourself more of an opportunity to pass when you kind of split the amount of capital you have. And again, I always talk about it with prop firms, and we can have a separate discussion on this. With prop firms, you're typically going to want to set a budget so that way you don't become a gambler. Because I've seen people, especially on the prop firm side before, um, you see people that are spending so much money on these things, using a credit card and all these different things. So you don't want to just put yourself in a situation where, it becomes a little bit detrimental. So autonomous or larger stop loss. Yeah, exactly. Like same thing with like I'm not gonna outline all pros and cons for every different thing, but like if you have a large stop, the truth of the matter is your risk to reward might not be as high. And if your risk to reward is not as high, but maybe you might be able to get a bigger win rate. Maybe a pro is that you just let the market trade and then you're more relaxed. That's what I'm saying. Pros can even be just based off your mental, right? Like I don't like scalping because I don't like taking too many trades. It puts me on edge when I'm taking too many trades and I can find myself over trading. Like these are things that you could be labeled as pros and cons. And who cares what someone online says about how you should trade? Who cares what I say, to be honest, on how you should trade? I just try to be very honest with you guys because at the end of the day, it's going to ultimately be what resonates with you. I might say something that absolutely you might think like, wow, this guy Omar is an idiot. And this guy Omar, I don't agree with that at all. And listen, guys, I'm very honest with people. Like if that's the case, that's perfectly fine. I don't take offense to it. Trade how you are going to be able to trade to be able to put together a system because at the end of the day, it's up to you to kind of figure it out because you have to trade a model that you're comfortable with and that you're confident in. I'm very confident in the way I trade. Some people might not like it, and then some people might love it. You know what I mean? It's really up to the individual. So Sarah says, I have this problem, Omar. I try to find a low time frame entry and get stopped out and try again, then end up revenge trading so the trade can go my way. But I've totally messed up the setup, tried to enter on the 15-minute from a 4-hour ABP. So that's the thing, Sarah. So for you, it's good that you're at least recognizing what issues you're having because, okay, so for you, right? For you, maybe maybe just entering on the 4-hour retracement okay, so it also depends, right? Like if you're taking a 4-hour ABP, if let's just say you're taking a 4-hour ABP play, all right, as an example, right? How many times do the ones that you find actually work? Like you have the variables and it works in your favor. If the bias works in your favor, like let's just say 70% of the time, like damn, I knew the direction, I found a really good EBP, it had all the proper variables, it went in my favor, but I messed up the trade. But it was going in your favor 70% of the time. For you, you might have to say, hey, you know what? Maybe you take that approach, right? Where you take this approach where you're just going to enter on 25 to 50%, stop loss roughly 80% of the EBP range, right? Like something like this. And then, yeah, this could be something that you do. Or maybe say, hey, I need to be as close as the 50% as possible, right? Again, you could do that. And then you're minimal risk. And then again, you won't. Now, the con is you're not going to have the best risk to reward, but then you're going to have to find these smaller EB. So then how do you counteract something like this? You find a smaller 4-hour EBP because remember, like imagine this EBP that formed on GU, right? On the 4-hour time frame. Imagine this one um, was like a much smaller. So it's like from here, let's say to here as an example, and you were able to enter here, stop loss here, and then you're like, wow, do you see what I mean? Like you'll be able to kind of have a smaller stop loss with the target. Now you have a 3-hour move because it's a smaller 4-hour EVP. So that's how you kind of go about that approach. So you can implement this right here. This could be your entry model moving forward if you're getting the direction correct more often times than not. Um, okay, let me just remove this so it's a little bit cleaner. Oops. Okay, so Thomas, I prefer to have higher win ratio than RR. See, exactly, that's what I mean. Like for me, I actually prefer sometimes a little bit better risk reward. I don't mind getting stopped out, to be honest, because if I know if I can get a 3R, 4R move, to me, I just feel more confident. Like, okay, if I go for a specific week, if I go, let's just say I take only three trades for a week, I lose two trades and I win one. But the two losses, minus one, and then that third win, right? That third win was a 3R. I'm up 1R. It's not the best in the world, but at least I end up positive. That's kind of how my approach is. It puts less pressure on me, but again, someone else might prefer, and a lot of people I know prefer higher win rates because it just helps them with their confidence. It helps them feel better about their trading, and that is a pro. That's what I mean. So everyone, this is going to be different for every single one of you guys. So when we're broke, can you do a future webinar about profit? Yeah, I'm 100% gonna do a future webinar about that with like full on like presentation slides and everything. Because I think prop firm challenges, I don't think it's that difficult, honestly, to pass, in my opinion. If you know what you're doing, of course. I mean, it's just a matter of like cap how much capital do you have to invest and how to properly invest the money into the prop firm challenges so you're not becoming a degenerate gambler. So Assad, which EBP has a higher win rate, 4 hour or daily? To be honest, it's not like they're all pretty much the same. Well, it depends. Like, what are you looking for? If you're looking for the DOL, right? Now I could show you guys the statistics, right? Let's go ahead and do that. This GU, man, it's like crazy. Like the market recently has just been moving at like such late times in the day, which is like crazy. But like this is something like going into tomorrow. Again, I know I'm like side tangent here, but just because it's such a really good setup. Where we have this 4 hour order block now that's formed. So I'm going to look for a potential continuation. And I think realistically should not go back below this inversion. But I'll talk about this in the weekly commentary. But okay, so look at this, right? So let's just do this. So let's just put the statistics on like the standard deviation of 0.27. Mind you, this is completely all right, these are the fib extension targets I typically use, and let me remove this, right? These statistics are pretty much without any context, right? So without any context at all, how often does the market hit these levels, right? And I always tell you guys when it comes to EVPs, I'm more of a fan of like trading with context. Now, without any context, how often does the market 4 hour bullish EVP on GU hit the DOL? So DOL is just this, right? The 4 hour bar high, pretty high percentage, but sometimes it closes right near it and then just hits it. So like obviously it's going to be pretty high. Now, objective one, which is like right here, and objective two, right? It's going to be on the bullish side, 63.27% and 42.25%. And then these are the percentages on the bearish side. So there's like edge in here, right? Because you know that if you can get a good entry, these could be your targets, right? And these are based off of over 800 sample sizes. So pretty much going just under 1,000. 470 on the bullish, 430 on the bearish. So again, guys, like I don't teach stuff that's like nonsense. Like this stuff actually has statistical edge. It's just finding how to put everything together in this type of framework to make sure things that work out well. Now, let's go to your example. Like what was better? It's really pretty much the same, roughly speaking. So let me go to the daily time frame, and you'll be able to see the stats will change. Just give it a little bit of time to load, but you'll see the percentages are roughly the same. On the daily, you're pretty much going to get, they're a little bit better, to be fair. So these are actually a little bit higher. So to answer your question, it's the daily. And that's the beautiful thing about getting data and statistics on your trading models. You don't guess. But I do want to say the sample size is lower, right? Because obviously you're going to have less daily EBPs versus 4 hour. So there is that thing that you have to mind that there's, I mean, but still decent sample size, 66 examples on the bullish and 59 on the bearish. Now, if I go to the daily time frame, and it should have a bigger sample size. Okay, perfect. 666, not the best number, but to your question again, the daily actually has a higher percentage when you're looking for the fib extensions. So the daily, to your question, actually, it's actually the daily time frame that has better percentages of working. So really good question, man. And again, what are we forming on GU right now? A daily EBP, weekly EBP high. I mean, this is a type of setup. I'm literally not looking at anything else going into tomorrow. Like to me, like you could even theoretically break out. Obviously, it's like 430, which is not ideal, but it could be even a breakout entry, right? Breakout, order block, stop loss below the candle low, target this 1.34R, and this is what I mean. This is not going to be the most ideal type of entry model with the range. But then when you look for lower time frame entries, it just, it just helps the risk to reward. Um, but again, sometimes if you guys want 1.5 Rs, 2R moves, and you're getting them on a high win rate, it doesn't even matter. So let me go over here and let me answer these last few questions, and then we'll kind of continue on with this. Excuse me, let me just get a bit of water. Okay, cool, 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 cool. Vish, bro, isn't the target supposed to be zero? Yeah, so that's only, so the fib settings are just going to be a little bit different from that, right? So when you draw the fib, I don't know why it's like that on TradingView, but like you have to put minus 0.27, minus 0.619. The way that the indicator is coded in terms of the standard deviation target, it's the standard deviation of the range. So it's the same thing, but I don't know why on here it does that. Like look how um well, actually, I do know why, but yeah, because look, if you do 6.19, it's going to show the Fibonacci retracement inside of this, the one and the zero, right? So look what I mean by that. If I take out the minus sign over here and put 0.619, you're going to see it's going to form right here, right? I have to remove, let me remove this and you'll see 0.619. So in order for it to be outside of this in the Fibonacci sequence, you just have to put minus. But it's not about the minus or the plus, it's just the value, 0.619 extension. Then you should see it populate right now. Beautiful. Yeah. So that's the only reason why you have to put a negative in the Fibonacci sequence. Assad asks, can we take trades on 15 EBPs as well? Will the win rate reduce drastically? It depends, man. So like it's like, well, what 15, like if you want to trade the 15-minute EBP, there has to be framework around it, right? Like you can't just like imagine like if you're just trying to trade like any 15-minute EBP, and I'm pretty sure I can find a bunch of them, right? Let me even like, just put the indicator on just as an example. Okay. Okay, cool, 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 cool. And just put the time. Let's just assume that you're not even using like in the maybe if you're using the golden hour, that's something you guys can go ahead and back test, right? But like, what are you gonna do? Are you gonna try to trade it down to the low, down to like it's just you know what I mean? It's just one of those things. Let me even do show history. So we see multiple examples of different EVPs. That's what I mean, like well, on the 15-minute time frame, where you're going to trade this one down to this range, this bullish one to up here. There's so many 15-minute EVPs that it doesn't really make any sense. Personally, for me, let me just remove this low time frame filter and show history. Oops, I did on the wrong one. Like there's so many 15-minute EVPs. That's why it's like you need to have, you can't just be, okay, I see a 15-minute EVP and that's it. Because, or like I see a 4-hour EVP and that's it. Like if it was that simple, then you can just, like you can exploit this so easily. So you just need to have context. Now, again, you could use this. Like, what if you combine some, maybe you had a trading system, and again, what are you exactly looking for? What if your whole system is like, okay, I want to buy the golden hour low, and then you wait for a 15-minute EBP. And that's the beautiful thing with the indicator, man, on the one that you guys have. You could just turn on the lower time frame filter, put the golden hour, remember 15 minutes beforehand. So if you want 8 to 11, it should be 7:45 to 11:15. And then go ahead and then look at different examples. And who knows, maybe you find something that's very, very good, man. And that's what I want to really encourage is if you want to use the 15-minute EBP, go ahead and like backtest, have a very clear structure of what you're looking for. How are you going to enter it? What are you looking to avoid? The pros and the cons, and then you'll have a full trading model that you can go ahead and study. And if you're comfortable trading that, guaranteed, like that's what that matters. I might not like the 15-minute EBP, and you might absolutely crush it with the 15-minute EBP. And that's the beauty of this. Yeah, so Saad says, we'll try this in the golden hour. Yeah, I would suggest that. Like, do it during highly volatile times, and then yeah, then check the 15-minute. Maybe do the 30-minute. There's so many different ways that you guys, especially now with the indicator that you guys have, to backtest this type of stuff. So I'm going to wrap it up in terms of how to create a full trading model. Now, once you kind of figure out what it is that you want to trade, you want to pretty much go into the next stage, which is going to tie up all together, is you're going to have to ultimately do two things, right? If it's super mechanical where there's zero like ambiguity, right? You could back test again, only if you have a 100% mechanical system. Because this is a problem, man, with backtesting. If you have a little bit of discretion, it's going to be dependent on a lot of your different variables. Unless you have every single variable defined. And what do I mean by that? Let's just say I only look for EBPs inside of this time window. I only look for EBPs that are in this time window, and the other variable is it takes out prior week high. I'm only looking for EBPs that happen and close at this specific time. Unless you have every variable combined, and then you can go ahead and create a mechanical, you can go ahead and backtest it as a mechanical system or approach. Now, the other way that I like to do it is journaling, and I have the video ready on journaling, the setups, day in, day out. You could do this. You could also just look at different examples, journal, study different charts, and then see, okay, which ones worked, which one didn't. And then also in real time, when you're taking trades, you want to make sure that you're starting to see, okay, how am I trading well? Like for example, I talk to you guys about this all the time. I do not trade well on Mondays, right? And you guys have seen it for the past 2 Mondays, lost last week on NQ, and then Euro USD. Also, not the best trade today as well. And it's because I know I've been doing this for a while, and I know like Mondays for me is a little bit more difficult because I don't get a clear sense of direction on the marketplace in the beginning of the week because the beginning of the week is a little bit more difficult to gauge for myself, right? Someone else might crush it every Monday. Someone might have a 100% win rate every single Monday. It doesn't matter because me, I know like these from journaling my setups, from journaling my trading that I don't perform well on Mondays. Someone else I know doesn't trade on Wednesdays because they don't want to get caught in the midweek reversal because they'll typically find a trend Monday, Tuesday. They don't want to get stuck buying a dip or something like that or shorting on Wednesday because there's a midweek reversal. So they avoid Wednesdays. And that's what I mean. Like it's all, and for me, I actually prefer Wednesdays and Thursdays and Fridays because I have the week to be able to tell me what direction the market wants to go to close out the week. So yeah, guys, so this is going to require a lot of work. And the truth of the matter is most people don't want to put the work in. They want a simple system that they can follow 100%, and they don't want to put the work and the time to get familiar with the system to create a full trading model. Now, again, for me, I like to use these types of like for me, like one of my trading models is literally just trading the 4 hour ABP at prior highs and lows, right? Kind of like how this one did on GU, even though this one was just a little bit late in the day, man. Daily, again, clear higher time frame, clear higher time frame level with the daily fair value gap. It doesn't matter because we're going to close as a EBP. I mean, 18 minutes, very, very likely we're going to close, and then we're going to have a potential setup to clear out the highs. Like for me, again, A is super A plus. So we have a fair value gap the market traded into, right? We have the 4 hour EBP that formed. And also what you can do is you could just do like if this closes an EBP candle, you could just enter again, like I said, um, where's the changes to the 4 hour time frame, right? Just like I talked about here, you could just enter on the 25, 50% with stop loss above roughly 80% of the EBP range. So if you get like an entry like somewhere around here, and then stop loss pretty much like around there, and then you know that you have a target up here. That could be your first entry, right? And maybe, or like let's say you want to use an order block, right? Maybe you want to use a fair value gap, whatever the case may be. You're going to have to ultimately decide how you want to enter. And that's another thing that I want to end this on, right? Before I kind of close it off with any questions, is this is the most important part. Do the same thing over and over and over again. Do not deviate in the beginning. Do not deviate. So if you choose to take these types of entries, only take these types of entries. Do not change anything up. Like, don't do this entry one day, then this entry the second day, then this entry the third day. You can eventually get to that point. And who knows, maybe you're at that point right now where you could just do this. It's just very hard because if you're constantly doing different things, it's very hard to track what's. If you're always doing this approach and then you're realizing like, you know what, my risk rewards are not that great. You know what, I wanna change something up. Do the same thing over and over again. I would say for at least like a month or two. And I know some people are gonna be like, oh, but that's such a long time. It's like, guys, like with trading, it's just a matter of like, putting in the reps and time and studying and journaling and backtesting, etc. Like this game is all about time in the marketplace to gain the experience. What's a few months if like in a few by the end of the year you can pull in a couple $1,000 from a prop firm, you know? Like trading is so much easier now because there's so much information out there. And not only that, you don't even have to risk your own capital. You literally could just get a prop firm challenge once you become very proficient, it becomes like you're not risking your own money. You're able to get payouts. And again, I never promise anyone that they're going to be making hundreds of thousands or millions of dollars from trading, but you could definitely make $1,000, $2,000 for the month, of extra income. If you do $2,000 a month consistently, that's $24,000 a year pre-tax, depending on where you're from. That's still a very good income that you can bring in on top of whatever you have. And again, I tried to set realistic expectations, because I know like the reality is to be able to trade to the seven figure and high six figure mark, you have to be able to, you have to be willing to put on some risk. And some people are more risk averse than others. But I'm convinced most people can make $1,000 a month, $2,000 a month from trading, especially with prop firms. So let me go ahead. I'm going to answer a few questions, but that's pretty much how to create a full trading model. Answer these questions for yourself. Make sure to go ahead and like be as detailed as possible. Obviously, I'm over here. I'm just like it's like a rough overview, but be as detailed as possible. And also, if you are someone who maybe you don't want to be as detailed because you want to leave a little bit of room for discretion, that's perfectly fine as well. But make sure that you're aware that you're doing that. Okay. So Vish, backtesting for me personally is a hamster wheel. I prefer trading a small account and journaling. Exactly, man. Like you're better off having a small account or maybe a prop from free trial. They even have those, and you're better off doing that, to be honest. You really are. Backtesting, unless you have something super mechanical, then yeah. Now again, you could go back using the indicator, right? And then like the show history section, and you could just look at like right? You could just start looking at, okay, you know what? I want to study what made this bar work? What made this like you could do that. So for me, I consider back testing more so like if you're trying to gather data. Like you can only gather data if it's 100% mechanical. So I want to outline like what do I consider back testing. Now, if you want to go out to prior examples and study those prior examples, that's perfectly fine, man. I think this is a much better approach. Like like do that for sure. Like, okay, you know what? This one worked. What time did this work? Now, again, if you want to like maybe you want to study 4 hour EBPs and do a bunch of like back tested data on them, then that's perfectly fine. But just you have to be aware what you're doing with your back test. So Assad asks, is a balanced price range on the 15-minute retracement inside the 4 hour EBP a good confirmation or entry? Yes, 100%. It's funny because that's literally what I talked about in that video journal. Over here, like if this was 2 o'clock, that's the unfortunate part. Like at 2 p.m., like the market forms a beautiful setup. Like for me, this was inside of the 4 hour EBP. So let me just adjust this. Okay, never mind. Let me just make this one the 4 hour EBP since I just already have it up. Right, show history. Right? Like, look at this, right? Price creates this inside of the EBP range, right? Comes down into the fair value gap, maintains the swing point from the bounce price range, and again, pushes up. Now, again, that's what I was talking to before. Some people will be like, well, what if this happens, right? And it comes back to test maybe this prior fair value gap that has already been retested, right? And then pushes up. Well, this person would have got stopped out, and this person waiting for the entry would have got in. But guess what? If someone was waiting for this retest, in this example, and that's why I say you have to do the same thing over and over again, the person who waited for the retest did not get a trade entry, and the person who bought this is in the trade and profit. Thomas asks how to get back to trading routine after maybe 5 to 6 losses in a row. I'll say this: if it's 5 to 6 losses in a row, then there's probably some sort of issue when it comes to the trades that you're looking for, right? Because 5 to 6 losses, like will it happen from time to time? Sure, possibly, but that's a lot of losses in a row. So I would suggest like if you're kind of in that, number one is like if you're doing any sort of like challenge or like you're trading any real live capital, to put that on the back burner, right? Because if you're taking 5 to 6 losses, you're probably going to want to see, okay, what is it that you're doing? Because if you reverse engineer your losses, like for example, I've talked about this in prior session. Where did I come up with where did I come up with not shorting dips, right? After the market hits a key level. So we're at a daily time frame here in GU, right? Once the market hits this level, why am I not looking for once the market hits this, right? Why am I not shorting this OTE as an example, right? It's because during my back test, I've learned that whenever I tried to short something like this, after the market hit a key level and we had a market structure break to the upside, if I tried to short this OTE, I'm typically going to get stopped out. So reverse engineer your losses because if you took 5 to 6 losses in a row, what if you did something the opposite of it, right? That's what I mean. That's how it came about with like some of the stuff that I have done in the course content is like I used to trade short something like this, and then I realized I would get smoked, right? I'll get that little reaction. I'm thinking, okay, the market's finally gonna go in my favor, and then I get squeezed, right? And I've learned over time, it's like, okay, well, this for me is like the reason why, this was the reasoning, right? Because usually the swing low on the retracement up was clearing liquidity, maybe cleared a fair value gap, and now it's going into consolidation or it's actually in a buy program where it's going to set the market higher. Obviously, GU is bullish on all time frames, so like this one is like as an obvious example, but yeah, reverse engineer your losses. Don't trade anything in terms of live capital. If you're doing a challenge, maybe take a step back. And in my opinion, you'll be much better off doing that. Francis, if a trade is playing out in Asia and you don't trade Asia session, you're pretty sure it's a good trade, but would you take it or would you rather wait till London session? This is honestly, that's a great question, man. So he's essentially asking, like, if I see something like if I'm very bullish on GU, do I jump the gun and just enter in Asia? Um, I don't like to trade GU and EU in Asia. I'm comfortable trading GJ, dollar, yen, gold in Asia because those typically will move in Asia. Like remember last week with the GJ trade, right? That one just made sense because yen pairs will typically move in the Asia session. Good question, man. Honestly, like this is where sometimes it becomes like, do you want to break your rules or not? And honestly, like I might break the rules on this one because it's like, dude, we have a daily EBP. We have a 4 hour EBP that created the impulse. Like we're about to create this 4 hour order block. We have a 1 hour inversion and we have a clear weekly DOL based off of a weekly EBP. You don't get these types of trades that often, man. Weekly EBP, daily EBP, 4 hour EBP, and 12 hour EBP. Off this fair value gap, like I'm probably gonna like once the spread kind of controls in Asia, I'm gonna try to see if I can get a dip buy, and I'm gonna talk about daily game plan as well. If I can just get a dip buy on the retracement of this thing with pretty much a stop loss below and then TP pretty much above here. So this is the trade I'll probably be watching for in Asia. And realistically speaking, you could put it like below that swing point right there to make the stop loss tighter. You could do again, that's 14 pips versus like 20 pip stop loss. The difference in this would be 2.4R, this would be 3.56R. You see what I mean in terms of like sometimes if you want to make a stop loss a little bit tighter, the difference in terms of RR. So yeah, and this is objective number two of the standard deviation. I think it's 0.27 if I'm not mistaken. I'm sorry, 0.619. So I'm more than likely gonna take a shot at this during Asia, but I'll post a daily game plan if I do. Again, Asia session for me is 7 to 9 p.m. EST. So yeah, that's a good question, Francis, because again, it really depends. Like a setup like this, I don't want to miss it. And some people will be like, "Oh, you're getting FOMO." It's like, no, man, because at the end of the day, daily EBP, weekly EBP, 4 hour EBP to set the low at the fair value gap on the daily time frame, like this. And the thing is this, if let's just say it stopped me out and then did something like this, where Asia consolidates and then the market drops like this, and then they're gonna be like, "Oh, well, you should have waited for London session." Well, guess what? You don't know for sure if this is going to happen. Plus, it's actually unlike if this actually happens, it's less likely or it's less probable in terms of a bullish move if we get back below this 1 hour structure because already inverted this fair value gap. The market already swept liquidity. There's really no need to come back down here to this fair value gap, in my opinion. But we'll see how we set up in Asia. Again, if I do end up just saying, you know what, I'm just going to take a chance on it in Asia, I'll definitely let you guys know in the daily game plan. Vish, bro, I suggest you encourage all the students to train and trade. Physically working out has created for me discipline as per the name of the company. Yeah, man, that's for sure. I also encourage sleep, man. Sometimes I'm like sleep deprived, trying to like trade, not the best thing in the world. Good nutrition, good game plans, keeping yourself like, active and also not being so ingrained by the charts as well. Mode, hi Omar, before you go, can you look at gold? Let's check gold. Funny enough, I actually was looking at gold for the retracement. because we cleared all this liquidity into this fair value gap. And if you go to the daily time frame, you'll see it more presently. I was actually looking for when I talk about discount to premium, this is a good example where price creates like a discount. We're at a discounted marketplace and we have a clear 4 hour fair value gap. I'll be honest, right now, I'm not really sure what gold wants to do. The monthly actually did not close as an EBP. So honestly, with gold, I'm kind of like not too sure. We are coming up into this bearish order block on the but if I see something, I'll let you guys know. I just don't want to force anything on this when I think GU is just a better opportunity, to be honest. Vish, check your email. Yeah. Let me see while we're on here. When did you send the email, Vish? Let me see. Yeah, guys, I'm sorry because I get so many emails. I get emails from like Robinhood, emails from WAP, emails from TradingView. Um, I get all my emails to this. So if I don't get back, feel if I don't respond to an email, feel free to like send a secondary email just to bring it back up into the queue. Because like a lot of my emails, I use the same email for a lot of different things, which I realized was a mistake. But yeah. Um, Sarah, thanks, Omar. Can you please go through your dynamic risk again? Because I know that's how you scale in. Yeah. I'll try to do it in a real life example, but the dynamic risk, okay, so for example, on this GU, for example, right? If this sets up, it's the same thing that I did with dollar yen yesterday, last week or 2 weeks ago, right? If let's just say a front side move, let's just say for example, right? If I see, okay, you know what, I don't want to miss this trade. This is inversion. So if the market comes back and tests this like down close candle before the move up, I'm going to put a buy order here and I'm going to put my stop loss there. Let's just say that the market comes down here, forms a 1 hour EBP or something like that. And then I'm like, wow, okay, I just bought the low. Now my stop loss goes up below the 1 hour EBP candle and the 1 hour EBP forms, then I get to enter on a backside move. You get what I'm saying? So you're buying the front side, and if you get a confirmation you're buying on the backside, you have two entries now. And if the market goes up to your objective, you have two entries. Your risk for you make so much more on the trade because you added to the position. But this is kind of like a rough estimate of that. Thomas, on the trade like GBP USD, A plus plus, you're risking more. Depends, man. Like it depends. I usually would if I'm on like if I let's just say I'm up on my account, like if I'm up on a funded account plus 3K, right? So plus 3% on one of my 100K funded accounts, right? If I'm up, honestly, I would risk more. Like I'm just being very honest. I usually risk more only if I'm in profit. If I'm in a drawdown period, if I'm kind of like flat, I'm not going to risk more. But no, I'm not saying we're going to risk the whole thing though, you know? Some people they do that. I'm not gonna lie, man. Like trading is one of those things that like most people will not admit this, but some of the biggest traders I know in terms of P&L, they put on massive risk. Now, again, like that comes later. If you're still like kind of working on stuff, like don't just take every trade the same risk and then slowly start to like, get to the point where you can put more size on a specific trade. Francis, how can I stop being attached to the charts? Because I'm so attached to the charts, even though it's a loss, just enjoy watching it. Honestly, man, like I used to have that issue as well. And the problem with like being like that, I honestly can't answer that for you. Like, it's just one of those things that you kind of just have to do it. Like, if you have, like, it's someone like, for example, not to make this comparison, but imagine someone who's an alcoholic. They know that they need to get away from alcohol, but they can't get away from it. It becomes an addiction. And honestly, man, trading can become an addiction. And that's why I try to urge people I try to urge people just, you really just have to kind of like understand your destructive behaviors. If you're someone who's always attached to the charts and you're always looking at the charts and then it forces you to be in a trade, that's not good. That's destructive behavior. And only you can kind of like figure out how to be able to stop that. I could tell you it's like, oh yeah, just don't look at the charts, go enjoy life, do all that. Bro, people used to tell me that all the time. And then I used to still have that addiction of looking at the charts early on, especially the first 2 years of my career, and then after a while you realize like, damn, like I'm losing out on my time. I'm not being productive outside of trading. And you know what? Like my only piece of advice realistically is like you have to Trading cannot consume you, man. This is just one part of my life, trading. I have other hobbies, I have other ventures that I want to get involved into. I do not let trading consume me. The moment you let trading consume you, you're done. You are done. June 20th, you email. Okay, so I'll check just again, Vish, email me again or like under that same email, like, oh, I'm just bumping this up and then I'll be able to take a look at it. Because again, yeah, guys, if you send me an email and I don't get to you, just if I don't respond within 24 48 hours, just bump it up because sometimes it gets lost because I get a lot of emails throughout the day. But yeah, guys, the recording will be up, so let me